say it's a beautiful day only because I really wanted the rain. The pansies need the rain. So I was thrilled when I woke up. It's 54 and a half to be exact here at the WCAB weather station. Ooh, 54.1. It's plummeting there, Todd. My engineer this morning, Todd. Good morning, Todd.
Morning.
Good morning. Good morning. It is. I think it's going to turn out to be a nice day. It's going to rain all day. The pansies need the rain. The snowflakes will melt, but the pansies need the rain. I still haven't cut the peonies down. Why does my wife always remember the peonies need to be cut down at like 1 in the morning? When we're out, I still haven't cut them down.
Take the trash out.
They're gone. And take the trash out while you're out there doing that. But we are, I walked in this morning, and I told Todd, I really don't know what to talk about today. Not because I'm lacking anything to talk about. I just don't know what direction to go in. There is so much to talk about. As you can tell, my throat's a little sore this morning, but I wasn't going to miss this program for anything. I was going to be here this morning. We just had a historic tax. Well, I don't want to say historic because Ronald Reagan's tax bill, I really think was far more sweeping and was far more reaching than the tax bill that got signed. But this was historic. And I've got a lot to say about it. Not just how it's going to affect your taxes, but just about it, period. And then I want to talk just a lot of the same old things that are happening. IRS, the scams. I'm getting a lot of phone calls this week about IRS scams. People are calling me. They've been getting phone calls. And why do they call me, Todd? Because I'm an enrolled agent. I'm a tax expert. I'm a person licensed by the IRS. I'm enrolled with the IRS to represent you, the taxpayer. Enrolled agents, CPAs, and tax attorneys are the only people permitted by the IRS to represent taxpayers in all matters. Audits, appeals. I not only prepare tax returns, I also give tax advice, tax consulting. What has happened is that because of our tax code and just the way our economy in this country has evolved, I say every decision today is a tax decision. Every decision, every monetary decision has a tax implication. And it shouldn't be that way. In other countries, in many other countries, it's not. Taxes are something you do once a year. You just write them a check and you're done. Most countries, you don't get a refund unless you've overpaid. Other countries have social programs like we do, and you get a refund because of these social programs. But taxes have become a tool of the Congress to achieve their goals. And a lot of these goals are social goals, and they really affect us. They affect everybody. If you need to get me, if you have any questions about taxes, taxation, you need to reach me. You want to make an appointment to talk with me. My telephone number is 828-289-9300. And if I stop here to cough, it's because I really am fighting something. I had a meeting on Tuesday, up in Asheville. Went up to Asheville, 8 o'clock in the morning, and it was 31 degrees up there, Todd. It was cold. Came down here, got done with my meetings, came down here, and the temperature was 68. So ever since that, in and out of heated buildings, and ever since that, I've just been fighting something here. But like I said, I was going to be here this morning. I have two offices. I have one in Rutherfordton at 113 Whitesides Road. I have another one in Polk County, downtown Tryon, at 226 South Trade Street, in the beautiful Art Deco building right off the historic district there. And if I take some pauses, it's because I'm really just trying to see what direction I want to go in, because none of these topics are simple topics. I could probably do 8 hours worth of radio on just what happened yesterday. Oh, before I forget, those of you live streaming us, watching us here live in the Blue Room, www.wcab59.com. You can see us And those of you Northland Cable channel subscribers on channel number 5, Northland Cable channel number 5, good morning, everybody. Thank you. My wife just sent me a text encouraging me. You're doing great. Because really, last night my throat was really sore. But I want to get this out. So, let me go ahead and get right into it. Let me jump in the snake pit, Todd. Let me jump in. Okay. President Trump signed yesterday the Tax Cuts and Jobs Act. Okay? What this means to anybody, it's way too early to tell. I'm just going to get right into it. The media, the ink wasn't dry on the law, and they were already publishing how horrible this was. I think one senator or congressman or a group of them probably said that 100,000 people are going to die because of this bill. 100,000 are going to die, Todd, because of this bill. So I looked up what they said after Ronald Reagan signed his tax bill in 1986. And you look at the parallels, there are so many similarities, really so many similarities. The big difference between the two bills was that Ronald Reagan's bill was truly bipartisan. Even though the Democrats didn't like him, they knew, and they didn't like him. Even at his funeral, I read some quotes from the liberal media at his funeral. They couldn't resist the opportunity to kick that guy. Before the casket went in the ground, the things they said about him. But at that time, in 86, they didn't like him, but they knew we needed this. And it was truly a bipartisan tax bill. It turned out to be, in spite of what anybody says, a great tax bill for that time, and it really set the pace or the precedence of how the IRS would behave for many years to come. Now, since that tax bill, Congress added 15,000 amendments, 15,000 changes to it. So by 2004, by 2004, the time of his death, it wasn't even anything like the original bill. But I was reading some quotes, and Sam Donaldson, remember him? He was Good Morning America. I used to say, I thought if you were down on your luck, this is a quote, and you got through the Secret Service, got into the Oval Office and said, Mr. President, I'm down on my luck, he would literally give you the shirt off his back, and then he'd sit down in his undershirt and he'd sign, but then he'd sit down in his undershirt and he'd sign legislation throwing your kids off school lunch programs, your parents off Social Security, and get the welfare queens off of welfare. That's what he said about him. That's what that tax bill was going to do. There was, at that time, I remember this because Ronald Reagan's presidency was the first presidency that I really remember. I was, 19 at the time, so I was very aware of politics, very interested in politics and what was going on. So it's the first one I really remember that I was, more focused on. I remember before him, I remember Jimmy Carter only because it was so bad. Interest rates were double digits. If you got a 16% interest rate to buy a house during the Jimmy Carter presidency, that was considered a good deal. That was really, what's your interest rate? 14%. How did you get that? That was like you knew somebody. There were people that had 19% interest rates on their homes. And of course, the oil embargo, gasoline went over $1 a gallon, and that was, the end of the world for most people. But then that was a lot of money back then. So, $1 a gallon, there were people that couldn't go to work, they couldn't afford gas. Of course, you couldn't get gas, especially if you lived in a big city. There was rationing and there was lines, even odd license plates. I feel like Grandpa Gilbert talking now. Well, and I am a grandpa, so I guess I am. So he passes this bill, and I'll never forget, there was an author who wrote a book, because this is before the internet. Today, they can literally get on and just say whatever they're thinking within minutes. They have no clue what they're saying, but they'll get on the internet, get on the media, and say whatever. Back then, you had to actually write a book, and you had to stop and think about what you were going to say, but they still said it anyway. There was a man that wrote a book about how bad the Reagan tax cuts were going to be, and he sold millions of copies. And because of the Reagan tax cuts, he saved about $200,000 in taxes. So he didn't know what to do with that. It was a life-changing moment for him. So, passed this bill yesterday, and the media is out there saying, I only read 4 or 5 of them because it just went from bad to worse. USA Today said the whole thing's a lie. It's not $5.5 trillion worth of tax cuts. It's not $3 trillion. It's $1.5 trillion. You know what I've said here before? $1 billion here and $1 billion there, and pretty soon you're talking about real money. That was a quote from the 70s from a senator from Illinois. Today we're in the trillions, and we're throwing trillions around. It's not really 5.5 trillion or 3.4 trillion. It's only 2.5 trillion. I mean, at what point is it a substantial tax cut? Is a trillions not enough? 1.5 is not enough? So they accuse the president of lying. He's making these numbers up. And it went on and on and on. Even Fox News was jumping in on it. And I say it's too early to tell. And I'm going to get into some of the high points. It's too early to tell. And people that are calling me wanting to know, well, what do? I tell them, do nothing. There's really nothing you can do. These tax cuts aren't taking effect until 2018. So it'll be the 2019, when we're preparing those tax returns for 2018, that we'll see. There's a big push in the media right now. There's some tips that they're telling people, and they're saying to prepay your property taxes because you're not going to get the standard deduction. Well, the standard deduction's been raised. Married filing jointly, standard deduction is raised to $24,000. This year it was $12,000. So they're saying if you want to do any charitable giving or you have taxes, prepaid taxes, prepay your taxes. And what they're talking about is taxes for real estate. Most people pay their taxes in January. They're due January 15th. This year, January 15th is Martin Luther King's birthday. Yeah, the 15th, that Monday. So the 16th, so it's been pushed back a day. Okay, most taxes that are due on the 15th are going to be paid on the 16th of January this year. So they're saying, don't pay them in 2018, pay them now, prepay them now. That's really bad advice because everybody's situation is different and everybody needs to stop and look at your situation. Not everybody takes advantage of Schedule A. That's where these prepaid taxes go. I forget the number. I'm going to look that up during the break. But the number of people, the percentage of people that itemize deductions, that's what Schedule A is. And the 3 main things that go on Schedule A is health insurance and medical expenses, charitable giving, and property taxes. Or property taxes and your home mortgage deduction. So the home, the charity, the medical are the 3 big things that go on Schedule A. The percentage of people that have Schedule A that's over the standard deduction is small. It's not for everybody. Not everybody benefits from buying a house. That's why that's just bad financial advice. Buy a house, you'll get a break on taxes. Maybe, but probably not. If I remember right, the number of people that itemize is like 20% that can itemize, 25%. The number's in there somewhere. And again, I'll look it up and give you the exact number, but it doesn't matter. You know if you do or not. People know if they do or not. What happens is, so they're saying prepay your taxes. Well, what happens is most people escrow. If you escrow, the bank is going to pay your property taxes right away because most counties, in most states, most counties offer a discount for paying early. 1% if you pay it, I'm sorry, 2% if you pay it by such a date, then it goes down to 1% if you pay it by this other date, then it's the regular rate if you pay it through the end of the time. And in some states, like South Carolina, has a homestead exemption on property tax. That means if you're living in your house, your primary residence, you live in it, you get a 50% deduction on your property taxes. It's called a homestead exemption because you're living in your primary residence. So your property tax, if it's $2,000, you're going to pay $1,000. In North Carolina, where the average property tax is somewhere around $1,600, if I remember right, the norm falls between like 12 and 18. The average is somewhere around 16. I mean, there are many people that have property taxes in this county that are under $1,000 a year. So prepaying your property taxes may be a good idea if you live in New York. I have clients in Long Island and they have property taxes of $16,000 a year. Yes, Todd, 16. That was a 1 and a 6. $1,000 a year. I talked to a man who's moving to North Carolina. He called me, he's moving down here, wants me to be his accountant and do his taxes. He's kind of getting things set up. His property tax, and he lives in Albany, which is not known for high tax. Well, it is. I mean, anywhere in New York, but he lives in Albany. His property taxes are $18,000 a year. So when I told him the properties that he's looking at, his property tax is going to be around $2,000, he said, per month? I said, no, per year. So I think the for sale sign went up on his front lawn after that conversation. But let's go ahead and take a break. We're going to come back and I'm going to get into some of the nuts and bolts of the Tax Cuts and Jobs Act. This is Gilbert Talks Taxes, WCAB 590 AM.
I want to welcome Tim Schlabach and Foothills Photo Works, a professional hybrid commercial photography studio. If you're concerned about your social media image, listen up. Whether you're an executive, real estate broker, lawyer, or business owner, your image matters now more than ever. And you know first impressions count. Whether you need professional portraits, corporate headshots, images of your products or facility, aerial photography, and videos of buildings, boats, or large acreage, affordable professional help is here for you. Foothills Photo Works can create media that will help your prospects get to know you better and help you look your best. Call for an appointment. That number is 828-668-2304. Mention this ad and receive 15% off your first session. That's 828-668-2304. Foothills Photo Works, your media professionals.
It's official. I'm celebrating another year of looking fabulous, all because of RSL Salon. Whether it's a hairstyle, a manicure, or a pedicure, call Robin at 289-9110 because everyone deserves to look fabulous. That's 289-9110. We are back. This is Gilbert Talks Taxes, WCAB 590 AM. Again, welcome those of you tuning in to the Blue Room live webcam. And I do look fabulous this morning. Got my sweater on, and you can really see the color looks good. The purple goes good with the blue. That's www.wcab59.com. Northland Cable Channel subscribers. Northland Cable Channel 5, good morning, thank you. The temperature's staying pretty steady, 54.5, and the rainfall staying pretty steady too. So, if you need to get me, my telephone number is 828-289-9300. If you have a question, you can call here at the studio. The telephone number is 287-3356. See, Todd, I got that memorized. You can call. Christy will answer the phone. She'll take your question. If it's not too complicated, because some of you have asked me some questions that I've had to go back and research, and really I'm proud of you for some of the questions you've asked. They got to be there Googling at home. How can we stump Gilbert? Stump Gilbert. They've asked me some questions that have been good questions. It just shows people are listening. at 8 in the morning. You can call here with a question, or you can call me. You can also email me, gilbert@gilbertcarmona.com. Shoot me an email, and if I can answer it on the air, I will, but I will get back to you. Again, my telephone number, 828-289-9300, if I didn't give it out enough today. So we are discussing the Tax Cuts and Jobs Act. And again, the thing I want to say is please don't believe the media hype about this. Because the fact is, I'm not going to sit here and tell you this is a great bill. There's a lot of things in it I like. There's a lot of things in it that I think have the potential to be great. But we just don't know enough yet. I learned my lesson from, not that I learned my lesson, I learned a lesson from Obamacare. Now, I went on record day one saying Obamacare was going to be terrible unless you're a person that had pre-existing conditions, a super fixed income, and benefited from these huge subsidies that you got. You think Obamacare is great, but the rest of us, it's been terrible. But we didn't foresee all the issues. There were issues that didn't even become evident till the second or third year of Obamacare. Issues like, here's an example of something that nobody saw this coming. You got Obamacare. You're heavily subsidized, like $6,000 a year subsidized. You have a pension. You worked somewhere, put money away in a 401k, so it's qualified, meaning no tax was paid on it. So when you pull it out, you've got to pay tax on it. You have a pension. Married, filing jointly. Couple goes through a divorce. So part of the divorce settlement is that pension needs to be cashed in and the money split 50-50. When that happens, that's taxable income. Your subsidy, you are now over the threshold, and you now have to pay your subsidy back. There are people that have had to pay their $6,000. The biggest one I ever had that had a client had to pay it back was $7,100. I had another client that had to pay back $5,600. She was $430 over the amount of money it made her. It put her over 401% above the poverty line for her income, and she had to pay 100% of her subsidy back. And just the obvious thing, which I said from day one was going to happen, is people are not going to report accurate information to the exchange. And the people working at the exchange were unqualified. They may be trained to work those computer programs, but they were not insurance agents. They're not tax people. They're not insurance people. They're mostly government workers that got a job because they could pass the civil servants exam and were told how to do this. They didn't ask the right questions. People didn't give the right information because you still relied on people to give the information. And people don't understand this stuff. It's very complicated. People don't know what AGI is, adjusted gross income. People don't know what modified adjusted gross income is. How do I know that? Because they called me to ask me. They're on the phone with this person and they're asking me what numbers. You know, I told a story several years ago of the lady who the man asked her, "Are you on Social Security?" She said, "Yes." "How much do you get?" She told him. That's the only number he put in. Well, what the man didn't put in was the fact that her husband had passed away and left her a substantial monthly stipend from his pension. He had one of those jobs where you get 100% while you're alive, and then when you pass away, your widow gets 50% until she passes away. Great pension. The 50% was a lot of money. She also was a retired school teacher who got a pension from that. So she comes to me, and we're going over this taxes, and I said, "You got a subsidy?" She goes, "Oh, yeah." I said, "How did you get a subsidy? You make so much money, you shouldn't have qualified." She said, well, I told the man what my Social Security was. I said, would you tell him the rest of it? She said, no, he didn't ask. I said, well, there's got a problem here. You're going to have to write them a check for $6,000, $6,000 and change, plus penalty. You're going to have to write them a check. And she was not very happy about this. I mean, it pretty much cleaned out her bank account, the money that she had. So this scenario repeated itself over and over and over. That's the lady that I said, didn't you think it was funny that you had a top-tier insurance plan with a low deductible for only $100 a month? She said, I've been a school teacher my whole life. I've never paid for insurance. I thought it was a lot of money. She couldn't believe insurance was costing her $100 a month. I said, well, wake up, because insurance is costing people a lot more than that. And that was getting back to what I originally started with. These laws have consequences that we don't know what they're going to be. So we don't know what's going to happen 2 years from now or a year from now. 19, when we sit down in January of 2019 to do these tax returns, we don't know. We're going to see all kinds of little things start to crop up. Another thing with that is it really messed with the Obamacare. It really messed with people that were going to take distributions from their pension plans, and the timing of it. It just messed it all up. And it drove the price of insurance through the ceiling. And of course, everybody sees that. And people are calling me going, they just quoted me $1,600 a month for coverage for my family. What's the penalty for not having it? I said, well, fortunately, this is the last year of penalties for not having insurance. It's been repealed. But we've got it this year. So I told him, I ran the numbers on his scenario, married, filing jointly, 3 children, what the penalty was going to be. He said, I'll pay the penalty. I'll pay the penalty. He says, I can't afford the insurance. It's more than my wife makes at her job for the month. I've got some quote. They're emailing me questions, Todd. They're up. They're listening. Oh, no. That's for another program. Let's stay on task here. Okay, so I said all that just in time to take a break. Let me at least get into this one part. Okay, and this part I think is the greatest part of one of the great parts. Let me say that. Because, okay, I know where I was going. The media says this is so bad, right? We in the tax business no different. We know better. There are so many scenarios. There are literally an infinite number of scenarios. When I say a scenario, I'm talking about you're single, you're married filing jointly, you're married filing separate, you're head of household, you're head of household with 1 child, 2 child, 3 child, 4 child. You've got a child under the age of 16, you got a child over the age of 16. You got a child in college, you got a disabled child, you got a disabled dependent adult. I mean, right there, when you put those few things I just said, when you put all those combinations together, you literally have about 10,000 different scenarios right there in just those few things I said. And then start throwing the income brackets in, 10,000, 20,000, 30,000, 40,000, all the way up to, you can go all the way up to $500,000. Now we are talking about millions of potential scenarios. All the people that I'm talking to, all the people in the industry that do tax returns, that work with tax returns, that really do this for a living, we're not in front of a camera telling people, or giving people our opinion, people that do this, are saying that for the average American, the average person with the average scenario, you're going to get back about $1,800 more and or pay on average about $2,000 less in taxes. So that's the scenario right now. Depending on where you're at, your refund is going to be bigger, or if you do owe taxes, you're going to owe less taxes by about $2,000. That seems on the high end. Yes, thank you. On the high end. Christy was with me in that meeting, so please just jump in. Whatever you remember, jump in on the high end. So that's our story, and we're sticking to it. So what I like, though, one of the things that I like is standard deduction has now been doubled. So the standard deduction has been increased to $12,000 for single filers. Before it was 6, 18,000 for head of household. It was 9 before. 24,000 for married filing jointly. So it's basically doubled. So what that is going to do is, especially older people that are on Social Security with retirement income, the point where you're even going to have to report taxes is now just gone way up, because that standard deduction is going to wipe that out. So it's really, I think this is just really, really, really exciting.
Just remind that it starts 2000.
Again, this is for tax year 2018. So these things are going to kick in January 1st, and you'll be seeing the benefit of it when we do your taxes in 2019, as far as a refund of that. But you can start tax planning on this now. This is law. This was signed in. It's not going to change. So the child tax credit was doubled to $2,000 per qualifying child. And a lot of this stuff is just, it's nuts and bolts. It's very confusing to a lot of people, but just know it's all good. The phase out was increased to $200,000 for individuals, $400,000 for married couples. Now, these are not going to be indexed for inflation. They made a big deal about, oh, that's bad. No, folks, we're in a flat inflation time right now. Unless there's a super spike in inflation, that's really indexing this for inflation is just ridiculous. Now, that adjustment to the child tax credit can offset the loss of the personal exemption. So let's get back into that. Again, I'm super excited about that. That is going to be real. That is really going to affect people right away that do their tax returns. Todd, where's the time go? It's 8:35. I overstepped. Now, this is a short break, right? This will give me just enough here to take a sip of water. This is Gilbert Talks Taxes right here, WCAB 590 AM. I'll be back in a minute. This is Gilbert. If you owe the IRS past due taxes, don't call those toll-free national numbers. Local, affordable help is right here in Rutherford County. Stop garnishments, levies, and liens. Call Gilbert Carmona at 828-289-9300. All initial consultations are free. Call Gilbert, 828-289-9300. Caught my breath, had a sip of water. We are back. Gilbert Talks Taxes, WCAB 590 AM. Because, Todd, why do I do this? Because taxation with representation has not been such a good idea. Although I gotta say, the more I read about this tax bill, I think I might have to rescind that. Taxation with representation just might have been okay this time. We are trying to read into this law. Again, I'm going to say it again. I really think that overall, I'm excited about what I'm seeing. I think this is going to be an immediate boom to some people. You're going to pay less taxes, get a bigger refund. One thing that I don't know why the news didn't pick up on this, under the Tax Cuts and Jobs Act, alimony payments will no longer be deductible by the person paying it, and it will no longer be income to the person receiving it. That is major. This provision of the law will only affect divorce agreements enacted after December 31st, 2018. So divorce lawyers are probably going to see a spike in their business this year, because they've got this. So divorces, people that get divorced with alimony. Now, not all divorces have alimony. As a matter of fact, Most divorces don't. They're just, the income levels just aren't there. It's not something they sue for. Mostly what we see is child support, which child support is not deductible or taxable. That is support to the child. And it's not a deduction. You're the father or the mother. I've actually had women that pay child support. You're the father or the mother. You're supporting that child. So that is not a business expense to you, or an income expense. And the person getting it, that money's supposed to be for the child. But most importantly, the mandate, which serves as a penalty for those taxpayers without health insurance, has been eliminated. Now that is effective for 2019. Okay, so we've got it there. Corporations, starting in 2018, the corporate income tax rate is permanently reduced to 21%. Yay. Everybody out there who's got a corporation, yay. Now, I got to tell you, I'm a little not, this one, I was hoping to see it at 15%, which would make us a little more competitive with some other countries, because the idea has been, the reason, okay, people are saying out there, what's the big deal with that? The reason is this. At 35%, we are double as a country, our corporate tax rate of 35% right now. As a country, it's double the average of other countries, especially in Europe. So a lot of large corporations have, and I've heard all kinds of estimates. I don't think anybody really knows the number. I've heard it's hundreds of billions, trillions, quintillions, whatever the number is. It's a big number. Sitting offshore, because if they bring that money back to the United States, they're going to get hit with a 35% tax. So the thinking or the argument has always been, let's lower that tax to 15%, have this money brought back to our shores. They call that repatriated. So you'll hear politicians say that word. They'll repatriate this money, get the money back into our system. Good for the economy. It creates jobs, creates capital expenditures, because if they bring it over here and they further spend it, it'll reduce the tax burden even more. You know, future tax gains will be reduced by those expenses. In theory, that's what would happen. I just think that low taxes are just good, period. You look at countries that have low taxes, they have high GDP, domestic gross product, and the people have more spendable income. And don't forget, 80% of Americans work for small business. Now, the Small Business Administration, the federal government, considers a small business any business making $14 million a year. That's not a small business. But really, businesses that make $2 and $3 and $4 million a year hire a lot of people. And they are, I mean, this is literally the spine of so many communities where everybody works for a smaller business. A business that definitely makes less than $14 million a year. So lower a tax rate for corporations is very good. Again, I wanted to see it at 15%, but okay, 21%. It's still off 14%. I know. It is a lot of money, especially when you're talking trillions of dollars. The Section 179 expensing cap increases. Now, small business people, listen up. Section 179 expenses. Okay, that is if you're a business and you buy equipment and you buy so many things that you buy, qualify for Section 179. Section 179 is a piece of law, so it's called Section 179. It's the 79th section of the law that lets you. Okay, let me back up. The law says if I buy, let's say I want to buy a brand new server, a computer server for my office. I'm actually thinking about getting one right now, so this is a very real numbers I'm going to quote you. I'm looking for a server with software and all the peripheral equipment you need with it. I'm looking to spend anywhere from $10,000 to $12,000. Throw in another $2,000 to have somebody come in and set it up. It's easily going to be a $14,000 expense. I can spend less. I can spend 7 or 8. I can spend a lot more. I can spend 20. Okay, under the law, that piece of equipment depreciates over time. You know, I'll spend, just to keep numbers even, I'll spend $12,000. I'm supposed to, they say that piece of equipment has a 10-year life. It's good for 10 years. And at the end of 10 years, it's going to be obsolete, which I always argue about computer equipment, because you can buy a laptop at Staples for $1,500, and by the time you walk out the front door, the newer model is coming in the back door, and the one you just bought's worth half what you paid for it. But okay, they say office equipment has a 3 to 5 year life. Some office equipment has a 5 to 7 year life. Some has a 10-year life. Okay, fine. So whatever that life is on that equipment, you depreciate it. And there's a formula for doing this. You can actually take accelerated depreciation, take a bigger piece up front, and some of it with a trail. You can't expense it all. You can't say, I bought this $12,000 computer today and just expense $12,000 on your tax return. But Section 179 allows you to do that up to a limit. The limit right now is $500,000, which sounds like a lot of money, but I had a man in my office the other day doing end of the year planning, and he's looking to buy a truck that's going to cost him around $100,000. He's looking to buy another piece of equipment that's going to cost him about $50,000, and something else that's about, I can't remember, $70,000 or $80,000. Anyway, he's looking to spend $250,000 before the end of the year. So the question was, what do we do? Do we depreciate it? Do we expense it? Well, Section 179 allows you to take that depreciation right away in that year and offset your income. So that reduces your taxable income by that amount of money. This has been great for the economy and great for businesses, because it gives people an incentive to buy these pieces of equipment. Now, it used to be that it had to be new equipment, and then they modified that, Congress modified that, I can't remember, 4 or 5 years ago, to include certain used equipment that was new to you. In other words, you can buy a piece of equipment that still has a 5-year, 6-year service life, especially industrial equipment. I mean, like an industrial air handler can last 30 years. Some of these industrial air compressors can last, they're very expensive, can last 20 years. So somebody after 10 years doesn't need it anymore, you're going to buy it because you can get 10 years out of it still, but you can expense it now. So this was really very good for the economy. It helped. Well, this bill is raising that $500,000 up to $1 million for the next 5 years. The full and immediate expensing of short-lived capital investments is allowed. These are your shorter term depreciation items. So this is major. So if you've got a business and you're thinking about making some big capital purchases, you can go up to $1 million, which sounds like a lot of money, but like I said earlier, you'd be surprised. You can burn through $1 million pretty quick, especially with capital equipment. Industrial equipment's very, very expensive, and we're seeing industry coming back to this county. We are seeing a growth in industry. There are, for whatever reason, a lot of Chinese companies started coming back here, opening up, and Mexican companies opening up plants in this country because they are fearing high tariffs. Tariffs are import taxes. Remember, I started this program by saying taxation pretty much is driving all business decisions these days. The tax implication, business decisions, it's really major. So you can burn through $1 million, but I'm excited about that. That's going to help a lot of small businesses, especially small businesses that need capital equipment. They're looking to fund growth, fund expansion. There's some carrybacks that are eliminated. Now, there are a few things that are going to retro back. that are retroactive, but nothing really worth discussing. Most of it's, very niche. It doesn't affect the average person. So to recap, I feel this Tax Cuts and Jobs Act is good. I think it's going to impact people in a positive way. I think it's definitely going to put more money in people's pockets, which is the bottom line, what everybody cares about. And I think we're headed in the right direction. I'm not even going to talk about AMT because most people don't understand it. Alternative minimum tax. It was created in 1986 with the tax bill of 1986, and it was a way to try to even out the playing field so higher net income people wouldn't pay as much, would pay more tax based on high income. It was an alternative minimum tax. It was a complicated formula. But what happened is we've had what we call bracket creep, and the numbers have just gotten to the point that alternative minimum tax is just not practical anymore. That totally got reworked in this bill too. So again, we're very excited about it. Let's go ahead and take a break. I'm going to come back, talk about some IRS scams, some things you can do this next week to lower your tax bill, and just some practical ideas going forward. This is Gilbert Talks Taxes, WCAB 590 AM.
My closet keeps shrinking my clothes. If you have that problem, take them to Nancy at Nancy's Alteration Shop at 610 South Broadway, Forest City. Call Nancy today at 429-6900. Wear the clothes you like to wear. Let Nancy bring them back to life for you. That's Nancy's Alteration Shop, 610 South Broadway, Forest City.
It's official. I'm celebrating another year of looking fabulous, all because of RSL Salon. Whether it's a hairstyle, a manicure, or a pedicure, call Robin at 289-9110, because everyone deserves to look fabulous. That's 289-9110.
Good morning. We are back. Gilbert Talks Taxes, WCAB 590 AM. If you need to get me, you can call me 828-289-9300. You can email me, Gilbert at gilbertcarmona.com. If you have a question, you can call the studio here. We'll be here for another 12 minutes. 828-287-3356. Now, when we leave here, we're going to go over to Jesse James Railroad Express and have us a couple of donuts and some coffee. Feel free to stop by. You can talk to me about anything, including taxes, if you have any questions. I've been doing this last couple of shows. We've been having a fun time over there. I'm not going to stick around for long. I've got a couple of meetings this afternoon, but we're going to go over there and have our donuts and maybe a little breakfast with Jesse. He's doing a great job over there. And don't forget to visit Open Box. He's another one of my clients. He is just doing a fabulous job. In front of the Walmart there, across the street from McDonald's, next to the KFC. He opened there. He's having his grand opening. And the prices in there are just incredible. Just incredible. Mention Gilbert Talks Taxes, and you know what he'll give you? Absolutely nothing. Todd said free parking. No, absolutely nothing, because his prices are so low. I can't believe it. I don't know how he does it. I was in there. There's a bicycle. $129. I shouldn't be saying the price because that bicycle's gone. The stuff flies out of there. I turned around something I was going to buy. Somebody got it before I could get it up to the register. But go visit him, Open Box. Tell Steven you listen to Gilbert Talks Taxes. Same thing when you go to Jesse James. Tell him you listen to Gilbert Talks Taxes. Now, I wanted to just remind everybody about the tax scams. Tax scams. They're at it again. They're calling people, telling you that they're from the IRS. There's a warrant for your arrest. You got to pay this money right now. If you don't pay it right now, the sheriff's going to come and lock you up. I had a client call me last week, and he said, I knew it was a scam, but it sounded so real, I actually listened to the guy long enough to get my brain to stop and say, this is a scam. What happens is, I can't remember the number, it's maybe 12, 13% of people owe the IRS money, have a bill with the IRS, and something like another 20-something percent have issues, some kind of an open issue with the IRS. So they know that on average, 1 in 4, 1 in 5 of the people they call are having an issue with the IRS. And they get enough people to bite. They have gotten, the numbers have been estimated in the hundreds of millions of dollars that they've gotten from these scams. They've even had people set up payment plans and are making monthly payments to them. And these people think it's going to the IRS. It's not. It's going to an overseas bank account, and you will never see that money, and you will never get credit for that money with the IRS. So this is a serious problem. Remember, the IRS will never call you. They will never threaten you with jail, and you cannot pay the IRS over the phone with a credit card. They just don't even do that. That's not even a payment option. Okay? So, and they're not going to have you go to Walmart and get a green dot card and pay them. They just don't do that. They're not going to have you Western Union them money or wire them money from your bank account. As a matter of fact, the only way I recommend you pay the IRS, now I know you can go online through pay.gov and make a payment with a credit card, but the only way I recommend you pay the IRS is to write them a check, because you have a paper trail. You have a canceled check that your bank will, they'll be more than happy to send you an image of it, and you have it as proof it got paid. The reason I say that is because I have seen people make a payment, and the payment has been posted to the wrong year, the wrong quarter, the wrong bill, especially people that have, you know, they might owe money for a business, they might owe money for personal, they whatever, and money gets put to the wrong account. I had that just happen last year, where I don't know how they posted it to the wife's social security number when it was the husband that had the problem. Anyway, I straightened it out with a phone call, but I've seen too many things happen. But the IRS will never call you, and the victims thereafter are the elderly people. Please, if you're a caretaker or you're responsible for an elderly person, please, please, please be aware of this. And like he said, the man said, my client that called me, he said they sounded so believable. See, he has a small issue with the IRS, so it made him stop for a minute. But they will never call you, ever. Everything they do by mail. Now, if you have an agent or an auditor that you're working with, then you may have a contact person. But even if that person calls you, they will call you and they will say, hello, Todd, I'm Agent Smith. And you'll know that you're talking to Agent Smith, who's your friend now because you're working with this person. But that's even rare. I mean, that's even rare. So they're all scams. And ID theft is still such a big problem. The ID theft, please, when you go get your tax return done somewhere, stop and ask them. And the IRS this is on their website, they're recommending this. So this is not just me telling you this. If you're going to go somewhere and have your tax return done, stop and ask them, how do you safeguard my data? And if they give you a blank stare and can't answer you, the answer is they're not. We spend a lot of money, and many of my peers, people I network with, we spend a lot of money on software, on firewalls, on data security. We invest heavily in this to guard your data. Encrypted backup. You never send sensitive information over an email. You have a secure portal that you log into and upload and download information into a secure US-based portal. Ask the tax preparer, will my data ever leave your office? An increasing number of tax preparers are outsourcing tax returns, which I don't have a problem with that practice. In that, I mean, it can be done the right way, but most of them are sending your tax data to another country. Typically, it's India or China. where they get a tax return done for like $5. So your data is now being sent over the internet to another country and sent back over the internet back to this person's office. And you think they did it and they did not. Ask them, will you be outsourcing my data? Now, many of them will say, oh, no, absolutely not. But get it in writing. Get it in writing. And how will you safeguard my data? And if you go to somebody to do your tax return and they whip out a laptop, now I use a laptop, but I use it in my office environment. And it's a secure laptop in a secure network. If they whip out a laptop and that's your data sitting in that laptop, I would be very afraid. Because if anything happens to that laptop, I mean, I've told so many stories over the years, you've all heard them before. If it's sitting in somebody's laptop, what's going to happen to that laptop? The security breach that happened at Spartanburg Regional, Todd, was a worker who left a hospital laptop in the back seat of his car. I can't remember the story. I think he went home at night. He lived in an apartment complex, parked his car, left the laptop in plain sight in the back seat, came out in the morning to go to work. His window was smashed. The laptop was gone. And on that laptop were hundreds of thousands of patient records. So that's why I'm telling you, you can't secure it enough. Now, what can you do? We've got 1 week left. What can you do to reduce your tax load at this point? If you are a small business owner, you can still fund a SEP plan, a self-employment plan. There's some things to talk through, but you can still fund some certain retirement plans. Let me say it that way. So, not just a SEP. There are certain retirement plans you can still fund with this last week to go. If you need to spend money, I talked a little bit earlier about Section 179 expenses. Remember this, though, if you're going to buy something, picking up the phone and committing to buy it is not enough. It really needs to be delivered and placed in service. So consider that. Like my friend that's going to go buy it's not a pickup truck, I'm sorry, it's a big truck, $100,000 truck, a commercial vehicle. He is going to be getting that thing. He's picking it up Tuesday, titling it Wednesday. It will be on the road driving Thursday. Okay, just in time to be able to write off that $100,000. Section 179 for the whole year. He's actually picking up 3 pieces of equipment. He'll be writing off $250,000. But you got to put them in service. Okay? Another thing is, my favorite saying is don't stick your head in the sand. Get your head out of the sand and just, what is the reality of this? Just sit down and do the numbers of how much money did you make? What are your, and it can just be, a ballpark. I mean, I do this on the back of an envelope sitting at Jesse James with people that come and see me. How much did you make? How much did you spend? This is how much you're going to have. What's your tax bracket? This is how much you're going to owe. We can just, ballpark. At least you'll have an idea. So many people come to my office in March and don't have a clue how much money they made, don't have a clue how much money they're going to owe, and then I tell them you owe $3,000 and they're in a panic because they've got to come up with the money in 5 weeks. That doesn't have to be. You can use this week for a little bit of planning. It doesn't have to be a whole thing. Really, it can just 30 minutes. How much came in? How much went out? What do you got left? Okay? Let me say it one more time. If you need to reach me, my telephone number is 828-289-9300. My time is up this morning, Todd. Thank you so much for being here. I appreciate it. And I will be back next week. And really, there's only going to be 2 days left then to do any kind of tax planning. So, the time's getting short. This is Gilbert Talks Taxes, WCAB 590 AM.
They're battling bad weather, too.
Northeast, several